Good afternoon, everybody, and welcome. My name's Tim Gray. I'm General Manager of Hotspotting, and it's great to have you all here for today's session. The property market's moving fast, and for professionals, that means keeping up the pace with both big picture trends and tools that can give you the edge is absolutely paramount in today's market. Today's webinar is all about equipping you with the live insights and practical innovations that will help you identify opportunities sooner, help you to work smarter, not harder, and ultimately deliver better results for your clients. I've got three fantastic guests lined up for you today. Each of them will bring something different in terms of perspective on the market and give you some tips and tricks to stay ahead in this environment. First up, we've got Terry Ryder, the founder of Hotspotting and Australia's leading independent property analyst. Terry will set the scene by unpacking the macro and micro trends driving today's market activity, from what's happening nationally down to the local factors shaping high growth suburbs. His insights will set the foundation for important metrics to look for, whilst also helping you weed out all the noise. Next, we'll hear from Jo Agresta, the founder of Abode. Jo and her team are tackling one of the biggest frustrations buyers agents face, the time-consuming process of finding the right property for the right client. Abode is a technology partner to Hotspotting, and together we've built a new feature, soon to be released in the Hotspotting members portal, that uses AI to scan live data from sources like realestate.com.au, Land Checker, the ABS, and of course proprietary Hotspotting insights as well. It'll then match to your client brief properties that suit that brief, and then can turn that into a white label solution that you can send directly onto your clients. Finally, we'll then be joined by Colin Wilson, who's the head of product at Stash Property. Colin's focus is on solving the challenge of efficiency. How do agents not only identify high-performing suburbs, but also manage multiple clients and portfolios without drowning in admin? Stash BA is designed to streamline this entire process, from suburb analysis and due diligence to managing client pipelines and even automating vendor outreach. Colin will give us a look at how the platform is transforming day-to-day operations for professional buyers agents. And as always, this will be an interactive session, so please keep your questions coming in the Q&A function. And without further ado, let's get started. So to open up the session, I'd like to introduce our first guest for today, Terry Ryder. Terry, over to you.
Hi, Tim. Thank you for the introduction. Welcome, everybody. If you've been following real estate events across Australia this year, you may have noticed a lot of change in markets in 2025. Places that were previously leading the nation on price growth are no longer the star performers, and places that have underperformed in recent years are now amongst the strongest markets in Australia. Darwin, for example, has seemingly come from nowhere to be a hot market. Melbourne, after 2 years of falling prices, is now producing sales at prices that exceed everyone's expectations. And the key question is, how could you, as real estate consumers or real estate professionals, know that these changes were coming? And that speaks to my topic today, which is discussing the metrics that matter when it comes to being able to identify change in property markets and identify the future growth markets. So I'm going to share my screen and walk you through a presentation that speaks to that topic. Present full screen, there we go. Okay, the metrics that matter and the agenda I'm going to walk us through today. Firstly, the problem, which is that most of the real estate data that people are presented with, and most of it comes to people via mainstream news media, is backward looking. It may be interesting, but it's not particularly useful in helping to identify the future, and that's what we're all about at Hotspotting, trying to identify those future growth markets before everybody else does, to give ourselves and our clients a head start in getting into markets early in a cycle. We're going to find out how we can determine the future of real estate markets and trends, the metrics that matter in identifying the future outperformers in real estate. And underlying everything I talk about for the next 40 or 45 minutes is the theme that real estate is essentially local in nature. And we're going to talk about why the local economy is the most important thing in real estate. So there's a problem with the data that's been presented to real estate consumers and anybody who's interested in real estate markets across Australia. Basically, real estate buyers want to know about the future, but economists and mainstream media keep talking about the past. So just a bit of a plug for the book that's being published next month. My 5th real estate book, Why Property Values Rise. It'll be in bookstores about a month from now. And one of the themes of that book, and something I spend quite a few pages discussing, is the difference between lagging indicators and leading indicators in real estate. Lagging indicators is what we're basically told about in media about real estate markets across Australia. They'll tell us what recently happened with prices, what happened in the last month, what happened in the last quarter, what happened in the last year or the last 5 years, and similar with rentals and other indicators of what's happening in real estate markets. Those are lagging indicators, and what we're essentially involved with at Hotspotting is trying to identify those leading indicators, the indicators that tell us what's going to happen with prices in the future, because that's the secret sauce that everybody interested in real estate investment is trying to find out about. So the data that is presented in media and talked about by economists and journalists and others can be interesting, sometimes maybe even fascinating, but it's all backward looking. And one of the essential themes that we continue to talk about at Hotspotting is that the past doesn't necessarily inform the future. I'm going to give you a couple of examples of data that's interesting, and I find the information that's currently on the screen quite fascinating because it talks about what real estate can do, but it doesn't necessarily tell you what the future holds. It does speak to some of the changes that have happened recently in real estate. For example, looking at the numbers for Melbourne and Brisbane, you can see that back in the early 1980s, when I bought my first piece of real estate, it was a house out in the Ipswich area in the southwestern part of the greater Brisbane area. It cost $25,000. At that time, the median price for a house in Brisbane was around $35,000. Melbourne was similar. You can see that in 2020, Melbourne was well ahead of Brisbane. It was a much more expensive market, but right now, Brisbane has overtaken Melbourne. That talks about what's happened in the last few years in real estate, that Brisbane has been very much a very strong growth market, one of the growth leaders for the past 2 to 3 years in terms of prices, whereas Melbourne has been underachieving. And prices in 2023 and 2024 dropped in terms of the median price in Melbourne, not much, but they were going backwards at a time when Perth, Adelaide and Brisbane were going very strongly forward. That's changing in 2025, and we'll talk about that as we go through the presentation. The point about the information on the slide is to show you just how amazing real estate growth can be, that the median price for Sydney in the last 45 years has gone from below 70,000 to $1.5 million. Interesting, but it doesn't necessarily tell us about the future. Here's another piece of information that talks about what's happened in the recent past, and that is that in many parts of Australia, in many of the states and territories of Australia, the regional markets have been outperforming the capital cities. And on screen we have some of the leading regional markets and the growth that they had achieved in the previous 5 years. These are figures from Cotality up to the end of 2024. Showing that Geelong outperformed Melbourne, the Gold Coast outperformed Brisbane, Newcastle outperformed Sydney, and that's been the case in virtually every state in the country with the exception of South Australia, Adelaide, and the leading regional market, Mount Gambier, very, very similar numbers. So that's the last 5 years, and that's the next set of figures speaks even more strongly to the fact that regional markets have been outperforming. The question that we have to address, of course, is the next 5 years going to be the same? And I would suggest that the changes that are happening in markets right now would suggest that perhaps something different is going to be the dominant paradigm of the next 5 years. But certainly in the last 5, small regional centres have been the outperformer of real estate across Australia. These figures come from Cotality, and they actually did this analysis because it was exactly in March of this year. It was 5 years since COVID struck, and they wanted to have a look at what's happened with property prices in the 5 years since COVID came along, and which have been the best performing markets in the nation in those 5 years. And the top 10 is what you see on the screen. Many of them are places that lots of people in Australia would know very little about, perhaps, or maybe not even heard of. Murray Bridge in South Australia was the #1 performer. Property values doubled in that compelling regional market in South Australia in that 5-year period. Kingaroy, little known, smallish regional centre in Queensland, was next. Geraldton, perhaps better known because it's been an investor favourite for people piling into the regional Western Australian market, came in number 3. Gympie might surprise a lot of people. Down market, stigmatised town, a little bit north of the Sunshine Coast in Queensland, came in number 4. What all these locations have in common is that they're all regional. They're all small regional centres. They're also all places that have offered attractive affordability, and that's one of the reasons why people have been buying there. They're all places that have been very affordable. They have had strong, diverse economies. There's been an infrastructure investment element in all these places, and that's been an important driver of those markets. And there's also a lifestyle element also in place. Those are the common features of those locations. Even Gympie, which is not somewhere that you perhaps identify as a lifestyle market, but it does have a major river which has its lifestyle features, and it's also got a gorgeous area of coastline as part of the Gympie local government area. So, and of course places like Hervey Bay, coastal market, Bundaberg, very, very close to the coast as well, major river. Gladstone identified as an industrial town, but it's also a place with great beaches and very easy access to the Great Barrier Reef. So there is a lifestyle component that's been partly driving demand in all these places, and is responsible for them being the top 10 places according to Cotality, formerly known as CoreLogic, in terms of price growth in the past 5 years. This is what happened in calendar 2024, and it really does make the point very strongly that real estate is local in nature. Economists like to talk about the Australian property market, and media often discusses what will happen with Australian property prices in the next 12 months. At Hotspotting, we're very strongly of the view there is no Australian property market. Real estate is very local. And on the right-hand side of the screen, you can see the results in terms of median price growth for houses, according to PropTrack in calendar 2024. We like to see markets, the Australian property market is a 4-speed market. Sometimes media talks about a 2-speed market, but there's more than 2 speeds happening at any point in time in Australian real estate. So you can see that last year we had 3 capital cities that had boom level growth. Had a couple of cities, Sydney and Hobart, which had very moderate growth, 2 that had no growth at all, and 1 Melbourne where prices actually went backwards. If you identify any calendar year going back 10 years, 20 years or 50 years, you'll probably find those same distinctions. There's no one situation at any point in time in Australian real estate. There's all those different scenarios: boom level growth in some locations, moderate growth in others, no growth, and some locations where prices are falling. You'd find similar distinctions if you examined regional markets across Australia last year. The key point about all that is that that's all interesting data. It tells us what's happened in the recent past, but as we often say, the past does not necessarily inform the future. So what we're looking for is those forward-looking indicators. So just to illustrate that point and emphasize it just a little bit more, calendar 2024, I've just shown you Perth, Adelaide and Brisbane very much leading the capital cities in terms of growth in house prices. If we fast forward to the end of the financial year that just passed, the 12 months to June, the pecking order has changed. Perth has fallen from the top down to more moderate growth, 3rd in the rankings, as at the 30th of June this year. Adelaide's risen to the top. Brisbane's still doing well. Darwin's come from nowhere to be a contender, having in 2025 become one of the hottest markets for buyer demand anywhere in Australia. Sydney is still very moderate. Hobart is starting to show a little bit of growth again. Melbourne, having for the previous 2 years being a market where prices have fallen a little, is now starting to produce some price growth in Canberra as well. So quite significant change from where we were at the 1st of January to where we were at on the 30th of June. Now, by the end of this year, as we see it at Hotspotting, the pecking order will have changed again. Based on what we're seeing in markets at the moment, we expect that Darwin may very well have risen to the top and be the national leader on price growth by the end of 2025. Brisbane will still be strong, in Adelaide, which continues to be an amazingly consistently strong market. Melbourne is rising. 6 or 9 months ago, Melbourne was not showing too many signs of this, although we started to detect it in some of our forward indicators, and we started to talk about Melbourne as a rising market in 2025, back at the end of last year and the very early part of this year. And Perth continuing to fall down the rankings as more and more evidence comes into that very strong 3-year boom in Perth has passed its peak and is no longer pumping to the same level in terms of price growth. So you can see how much change in just 12 months when comparing the situation at the end of last year on the left-hand side of the screen with the situation we're expecting to see at the end of this year. Just in 12 months, the pecking order is changing quite dramatically. So starting to talk about some of the metrics that we use to determine the future, because what we've just looked at is what's happened in the recent past and how much and how quickly real estate markets can change and how the pecking order in terms of price growth can change. And the key, of course, for successful investment, one of the keys is to be getting into the new growth markets early, and what indicators we use to identify those places. So we have a thing that we call the empirical formula, and this is the one that we use when we're making our selections for our hotspots reports, our top 5 Brisbane hotspots, our top 5 regional Victorian hotspots, and some of our national top 10 reports. Now, empirical means the actual evidence rather than theoretical evidence, and each letter of the word empirical stands for something important. So it's an acronym. So the E is economy. We believe real estate is very local in nature, and that real estate markets essentially arise out of local economies. So we're very, very interested in what's going on in a local economy when we assess a market. We want to see an economy that's diverse in nature. We're very reluctant to recommend economies that have one major driver, such as tourism, which is the case for some coastal economies, the resources sector, which can be very volatile and high risk for property investors. So we're very unlikely to ever recommend a mining town or a resources centre because the economy doesn't have the diversity that we like. Similarly with some country areas where the economy essentially is all about agriculture, which can be very vulnerable to drought or bushfires or other downturns that can afflict agriculture from time to time. We want diversity. We want to see, particularly in regional centres, we want to see economies that have 3, 4, 5 different strong sectors driving the economy, creating jobs, and out of that comes demand for real estate. The M in empirical stands for market size. It's very important to be investing in markets that have some critical mass. So we look at the number of sales that happen in a market in a year. We're reluctant to pay any attention to a market that has fewer than 30 sales in a calendar year. Population size is also an important factor, similar to the market size factor. Ideally, we like to see a population centre for a local government area, particularly a regional one that's at least 50,000 people. Sometimes we're willing to consider markets with a population as little as 15,000 if there are other special factors in play. So we have a certain level of flexibility there, but we're very unlikely to ever recommend a town of 3,000 or 5,000 people because there's likely to have the critical mass and the diversity of economy in such a place to provide sustainable long-term capital growth, which is one of the features that we're looking for. The I stands for infrastructure, one of the really important factors that we place a lot of emphasis on. Good, strong existing infrastructure, schools, public transport, all the basics that drive a community, but in particular we're looking for investment in new infrastructure because this probably more than anything else can be a game changer for a market. Major new motorway making a place more accessible, or a new rail link billion-dollar hospital can be a massive game changer for a market, creating thousands of jobs in construction, but even more jobs when it's finished and operating. You know, a billion-dollar hospital can have 5,000 or 6,000 people working there every single day, and that can have a major impact on the local market. So infrastructure is one of the big key features that we look for and talk about. The rental market is important. We're not going to be recommending a location that has, say, 4 or 5% vacancy rates. Unusual at the moment that those locations do exist. Low vacancies and evidence of rental growth is one of the metrics that we look for. It can be a great forward indicator of what will happen with prices, increasing employment. Similar to the earlier point about the economy, if jobs are being created in a market, then there's going to be rising demand for real estate, people looking for places to buy or places to rent. A capital growth factor, that's where we look at sales activity. One of the metrics that we rely a lot on, and I'll talk a bit more about as we go through the presentation, is sales activity, a great forward indicator of what will happen with prices. I'll touch on that in more detail in a moment. Affordability is very much king at the moment. As we saw when we examined the locations in Australia that have shown the best growth over the past 5 years, one of the points the top 10 had in common was a high level of affordability. And I think as we go forward, the pursuit of affordability is going to be increasingly a driver. It's harder and harder to find because we've seen such extraordinary price growth in so many places in Australian markets in the past 5 years. That pursuit of affordability is one of the things that's driving the choices that people make and introducing new growth areas. It's one of the reasons why Darwin has come from nowhere to become one of the national leaders in property activity and price growth in 2025, because it's the most affordable of the state and territory capital cities. That's one of the key factors there, as well as the high rental yields. The L stands for low risk, very important point. We're reluctant to ever recommend any location that has a high risk element, including mining towns, resources centres, locations that are highly reliant on the tourism sector, for example, very vulnerable to downturns, to bad weather, to economic downturn, when people are making choices about not spending on holidays to the same degree they might do in more prosperous times. So that's the empirical formula, and that informs the choices that we make in determining locations we think are going to be the performers of the future. Yes, very much about the local economy, and here a quote from Arjun Paliwal of InvestorKit, who's a very research-driven operator and someone that we respect a lot. And this is a quote from an article in Smart Property Investor, where he said, successful investing hinges on understanding how markets perform at a local level. So much talk in the media about interest rates by the Reserve Bank, and how that, according to the big bank economists and others like them, is the big determinant what happens in real estate. But we believe that to be false. It's really about local economies, while we have so many differences at any point in time. As Arjun says, local supply and demand factors still dominate performance. We wholeheartedly agree. Just to further make that point, Simon Presley of Propertyology says the biggest single important component for property market performance is always local economic conditions. We wholeheartedly agree with that. We have reports on over 100 local government areas in Australia. We tend to write our reports on local government areas. We don't write our reports on individual suburbs. We don't subscribe to the view that individual suburbs outperform. We believe that real estate growth happens in clusters. So we're focused on local government areas, and we have location reports on over 100 of those across Australia, the ones that we feel comfortable to recommend, the ones that we think are going to show performance in the long term. But those location reports, they may be 20 pages long, but perhaps only 4 or 5 pages is actually devoted to examining what's happening in the property market right now with prices and rents. That information is all there, but the great bulk of the report is devoted to talking about what's happening in the local economy of that local government area, because that's where the growth or otherwise in real estate markets arise. Is the local economy strong? Is it creating jobs? Is it diverse? Is there investment in infrastructure happening? All those factors we examine in great detail, because we believe, as Simon Presley says here, it's always local economic conditions that matter. So the qualities that we look for, we're more interested, as I say, in the economy and the current property market. We don't care if our property market has underperformed in the last 12 months in terms of prices. Whether or not we're likely to recommend a location has been a place to buy in now depends on what we see coming up in the future. In the past is irrelevant. For example, when we recommended the Sunshine Coast around 2019, 2020, the previous 10 years had been a period of very, very poor property market performance by that market. But we knew change was coming because we'd examined the local economy, we'd see the investment in infrastructure that was happening on the Sunshine Coast, and we knew it was going to be a national leader on price growth in the next 2, 3, 4 years, and that's what certainly happened. Around the time that we first started talking about locations in the Perth market, around about 2021, the previous 10 years had been a period in which prices had fallen in the Perth market, and we got a lot of pushback from customers saying, why are you recommending Perth? It hasn't performed. It's one of the underachievers Australian real estate. And our response was, yes, but it's about to change. And it did big time. And for most of the past 3 years, Perth has been the national leader on price growth. So economic strength, what's happening in the local economy, spending on new infrastructure, this can be the key factors and lead us to recommend locations now that haven't performed in the past year or so on price. At the start of this year, we were advocating for locations like Melbourne, like Darwin, both places that hadn't performed on price in recent years, but we knew that change was coming because we examined these economic, infrastructure and other forward-looking metrics. Lifestyle features can be important. It does seem to be a common denominator of those places that have led in the recent past, and it is something that can be a game changer, given that we still have that trend we call the exodus to affordable lifestyle, very influential in terms of home buyer influence on markets, people moving from one part of Australia to another, seeking a greater level of affordability. There has been a bit of an exodus of population from the 2 biggest cities to regional markets for people seeking that affordable lifestyle. That still continues according to the latest research, perhaps not the same strength as we were seeing in recent years, but it's still very much a factor. So lifestyle features can be important. But fundamentally, we're looking for change. We like to think of the work that we do at Hotspotting as fundamentally being the science of identifying and explaining change to our customers so that they can be aware of the change that's coming and the new growth areas that are about to burst onto the market, as we have seen this year with markets like Darwin and Melbourne. Okay. Just to emphasize the point about the importance of the economy in driving property markets, I just want to make the point, this goes back to last year, but it makes the point quite well. We follow the State of the States report published quarterly by ComSec, where they rank the 8 state and territory economies according to, they have 6 or 7 different metrics they use to provide a ranking for the economies. And we've found over the years there's a correlation between their rankings in terms of economic data and the outcomes with real estate price performance. So sometimes there's a very exact correlation, in fact. But in recent years, South Australia is ranked one of the 1 or 2 top economies in Australia. It surprises a lot of people because historically South Australia hasn't been a leader in terms of the economy. across Australia. It's been an underachiever, but in the past, say 3 years, it's risen from low down in the pecking order to be one of the top 2 economies. And at the middle of last year, it ranked, according to the State of the States report, the #1 economy in Australia. And at that time, we were seeing very, very strong price growth in the Adelaide market, also in regional markets of South Australia. So it was, depending on whose figures you believe, but both PropTrack and CoreLogic figures now Cotality, of course, showing really strong price growth at a time when the South Australian economy was ranked so highly. Another source, the Institute of Public Affairs, they at that time ranked Western Australia the #1 economy, and South Australia very close behind second, and of course Perth in that period where its economy has been so highly ranked and so strong, leading the nation. Perth at that time was producing extraordinary price growth, both for houses and for units above 20%, according to those CoreLogic figures. So there is a strong correlation. We've seen this correlation over many years. It's something I do refer to again in the book that's soon to be published, Why Property Prices Rise, going back 10 years, seeing the correlation between the rankings in the ComSec report, for example, that's published quarterly, State of the States, and where the cities rank and the regional markets rank in terms of the level of annual price growth for houses. Now, infrastructure investment is something that we really rate very highly as an influence on property markets. When there's a big infrastructure spend, when billions of dollars are being spent on various types of infrastructure in a local market, it creates a lot of economic activity, contracts being given to local businesses. It creates high levels of employment, and from that comes demand for real estate. Right now in Australia, we have an unprecedented level of investment in infrastructure, and this comes really out of the COVID period where it appeared back in 2020 that Australia was headed for a major recession. One of the responses of state and federal governments in Australia was to bring forward infrastructure spending that had been planned to try and spend their way out of the possibility of recession. So we have a massive investment in rail links, motorways, hospitals, data centres, airports such as the new Western Sydney Airport, expansions and upgrades for airports like in Brisbane, the Sunshine Coast and elsewhere. So $900 billion is our calculation of the level of the value of infrastructure projects currently happening or advanced in planning in Australia right now. It's also one of the reasons why we have a shortage of tradespeople in the housing market. One of the reasons why we have a shortage of housing, can't build houses to the level that the nation requires, is that there's a shortage of tradespeople. Many of them are working on these big infrastructure projects where they can earn more money. But it's a very significant factor, and right across Australia, there's big infrastructure investments happening, and that's been an influencing factor on the markets that have outperformed and will continue to do so. An example of that is Toowoomba. We often use Toowoomba as a case study of the sorts of the empirical formula. It ticks all those boxes that we talked about in terms of having a very strong and diverse economy, a growing population, a strong population, currently heading towards 200,000, and certainly according to the forecast, the top 200,000 in the next decade. It's Australia's actually largest inland regional city, the largest inland city after Canberra. It has low vacancies, rents are growing. It has had a level of affordability, although perhaps less so than a couple of years ago because there has been substantial price growth in the Toowoomba market. But the thing that really grabs our attention is the level of investment on infrastructure. We've recently had the completion of the new Wellcamp Airport, which has given this important regional centre direct flights to Sydney and Melbourne, which it previously didn't have. The second range crossing was a huge investment that's been completed, but the $1.3 billion hospital development is just starting. And of course, the Inland Rail Link, which is currently the largest national infrastructure project, currently estimated at $31 billion in investment, well under construction and has been for the last 4 or 5 years. Toowoomba is the main hub for the inland rail link, which connects ultimately Melbourne to Brisbane via Toowoomba, and the establishment of that inland rail link hub out near with the new Welcome Airport is a reason why so many very big businesses, some of them international businesses, are establishing big operations in Toowoomba, adding massively to the economy of that place, and creating a lot of jobs. And so we think that the biggest growth in this market is yet to come, but it's an example of how a regional city of substantial size with a growing population, a strong and diverse economy, and big infrastructure investment can be a major achiever on capital growth. We've seen it in the past 2 and 3 years, but there is more to come for that market. Another one that increasingly is grabbing our attention is Launceston in Tasmania, a market that in the past has been very strong. Pippa last year did some research on which jurisdictions in Australia had led the nation on capital growth over 20 years. Regional Tasmania actually came in number 1 in the nation. Hobart came in number 3. Adelaide was number 2. As we've said a number of times today, the past doesn't necessarily inform the future, but we do see positive change happening, leading us to believe that regional Tasmania is again going to be a performer. It's what we call a second wind market. It showed great growth most recently from 2020 to 2022. For the last couple of years, it's been flatlining. We're now seeing signs in the sales activity data that it's starting to rise again. And one of the drivers that we see in the near future for Launceston, apart from its affordability and the strength and diversity of its economy with a population of around 75,000, is the infrastructure investment, including a big hospital upgrade and most recently the announcement of a $2.1 billion AI factory that's going to have a big impact on real estate demand as we go forward in Launceston. So just looking at some of the forward-looking indicators that are useful, vacancy rates is one, perhaps not as useful as it might have been in the past, because it seems like everyone has got low vacancy rates at the moment, but in actual fact, not everyone does have 1% vacancy rates or lower. Many places do, but some are higher. Where vacancy rates are low and rents are rising, it's unusual for prices to be anything but strong in those markets. One of the indicators I've used a lot in the past is locations where rents are up and perhaps have had 2 years of strong rental growth, but prices haven't followed that trend yet. History shows that prices will follow that trend. I'll give you an example of that in a moment. Days on market trends there is another good forward indicator that you can use. Listings of property for sale can have an influence, but the one that we like and we use a lot is sales volumes. We find that sales volumes can be a great forward indicator of what will happen with prices, because there's a lag of maybe 6 or 9 months after a change in the market, as reflected by the number of sales that are happening, before it translates into the price data. And we put that into the report we call the Price Predictor Index. Just making the point about vacancy rates. In 2020, when COVID struck, media was full of dire warnings that real estate values were going to collapse. We saw something different happen. We were looking at the various metrics, and we felt that we're actually going to come into a period of real estate growth. The economists got that horribly wrong. One of the forward indicators of what was happening with vacancies, and you can see from April, May, June, July numbers on the screen, vacancies were dropping nationally dramatically month by month, and that continued for the rest of the year. That started to precipitate rental growth, and that was one of the forward indicators that led us to believe that we were going to come into a period of strong price growth. And what followed is what's now known in the media as the COVID boom, about 18 months of extraordinary growth in prices in many parts of Australia. Places where rents are up but prices not moving. An example of that is Sydney, going way back more than 10 years. In 2011, 2012, there were big rent rises in Sydney. but prices were very flat throughout those years, so prices had not reacted yet. And people in the know saw that as a signal to buy in the Sydney market, and what followed was 4 or 5 years of very strong price growth. But that indicator led people who were well researched to invest in Sydney in, say, around 2012 ahead of the price growth, as they'd seen how much rents had grown, but prices had been flat. Using the Perth example, in 2020, the Perth had no price growth for the previous 6 years. In fact, probably longer than that. I mean, almost a decade in which prices had been dropping in Perth, but it had been in 2020 a national leader on rental growth. And what soon followed was 3 or so years of very, very strong price growth. So it's a good forward indicator. As we often say, the only constant in real estate is change. And our latest quarterly analysis, which we publish in the Price Predictor, and we've just published the spring edition. It's a quarterly report. Significant new trends are evident there. Excuse me, just having a mouthful of water as my mouth got a little bit dry there. Significant new trends happening in identified by the Price Predictor, and what we do there is we look at sales activity figures quarter by quarter, and we're looking for locations where prices are rising strongly. Where sales activity is rising really, really strongly. As a forward indicator of what will happen with prices. Sorry, just a couple of technical glitches here. So what we do is we get raw data that discusses sales activity figures, the sales volumes, the number of sales that are happening in a market, and where we see a pattern of significant rises over consecutive quarters. It's an indicator that prices will follow that trend. It works in the opposite direction as well, where we see there are a trend of sales activity falling quarter by quarter. It's an indicator that price growth may stall or prices may actually fall. So the latest analysis, which is published in the spring edition of the Price Predictor Index, one of the really useful pieces of market intelligence that came out of this latest analysis is that it confirmed that those regional markets in Queensland that have been so heavily targeted in the last couple of years, places like Townsville, Rockhampton, Mackay, Gladstone, etc., all the indication is that particular feeding frenzy has passed its peak, and we're now starting to see sales activity subside. The spring edition analysis also confirmed what we had identified in the 2 previous editions, that Darwin had risen to become the #1, the hottest, strongest market in the country. Also revival in the big cities, the Melbourne revival, which we first indicated about 6 months earlier in the sales activity figures, was confirmed very strongly by this latest analysis. Also, regional Victoria was showing indications of coming back quite strongly. The trend we called the rise of apartments was also confirmed. What we've been seeing for the past, depending on which location, the past 1 to 2 years, quarter by quarter, we're seeing the market share of attached dwellings rising in some significant markets around the country. It's certainly true in Sydney. It's true in Melbourne, Brisbane, Canberra. It's showing up even Darwin, where it's been heavily targeted for houses, but also apartments. They're very affordable with very high rental yields. 7 or 8% is achievable. And so the market share of apartments in the Darwin market, but also the Gold Coast, which is obviously a market where apartment sales have been important for a long time, but the market share is rising and rising quarter by quarter. And that's a significant trend in real estate. Affordability rules, the markets that are really rising, including those apartment markets, because we're seeing more and more people opting for attached dwellings, units, townhouses, apartments Sydney, for example. And one of the reasons for that is, of course, it's the affordable end of a very expensive market. Perth and Western Australia no longer at the peak of their boom, having passed the peak, but showing a great deal of resilience. So we're not expecting to see any major decline in those markets. And again, the results reaffirmed our belief that real estate is very local in nature. We always identify the leading local government areas in the country, and some of those that have stood out in this latest analysis include the city of Frankston in Melbourne, also Hume. The city of Melbourne, which is the inner city suburbs of Melbourne, the apartment markets there are very strong. Some of the regional markets in regional Victoria, obviously Darwin, particularly the city of Palmerston, the satellite city to Darwin in the Northern Territory. Some of the markets of Brisbane. The Gold Coast is an exception to that earlier mentioned trend about the subsidence of the frenzy in regional Queensland. The Gold Coast is still pumping strongly. And Adelaide and some parts of regional South Australia still performing strongly. Some of the metrics that keep people awake at night, some of the metrics that people focus on that we feel that really don't matter, and people tend to obsess over certain metrics as the be-all and end-all of their search for good places to buy. A lot of people looking to buy the best house in the best street in the best suburb. We don't think there is a best street or best suburb. We tend to think in terms of local government areas, and that's what's more important. So analysis done by Simon Presley of Propertyology, where he analysed where the capital growth came from, and the asset itself actually achieves only a very small component of the capital growth that's achievable. It's their broader location, where they, according to their research, is 70% of the capital growth, the majority of it. And he makes the point that people obsess over the bricks and mortar when they're buying for investment. But he said if you get the city selection wrong, it doesn't matter what piece of real estate you bought. You can buy a property that looks $1 million, but if it's in the wrong location, a location that doesn't have the credentials for strong sustainable capital growth, it's not going to perform for you. So it's the location, the broader location, not the street, not the suburb, but the local government area or the town, the city, which is the most important factor. Some of the things that people do put a lot of emphasis on that we don't: local income, crime rates, social housing, the level of social housing in an area. A lot of people won't invest in locations that have a level of social housing or above average crime rates, for example. But the results suggest that those things don't matter. I'm going to give you, just as we get towards the end of the presentation, some examples of that. There's probably nowhere in capital city Australia more down market than the city of Playford in the northern suburbs of Adelaide. Those Elizabeth suburbs are seriously down market. They were basically created on the construction of housing commission housing, but their growth in the past 5 years has been quite extraordinary. The figures on the screen are their 5-year annual growth averages. So Elizabeth South has grown at 25.9% per year for 5 years. Elizabeth Park, 21.5% per year, etc. Extraordinary growth, which means that property values have more than doubled in those locations in 5 years, notwithstanding the fact that those are very down market areas with lots of social housing, above average crime rates, stigmatized in various ways, but hasn't stopped them. Affordability, good amenities, infrastructure, proximity to employment zones has driven capital growth there. Logan City, many of the suburbs on the screen have stigmatized in various ways, and these are the figures for 12-month capital growth in units. So a lot of people would say units don't show any growth. A lot of people would say these down market areas won't show good capital growth, but in the past 12 months, Logan Lee, median price per units up 27%, Logan Central 29%, Woodridge 36%, and their 5-year growth averages 20% per year for Logan Lee, 21% per year for Woodridge, 19% for Beenleigh. These are extraordinary growth rates achieved in the areas considered to be down market, and products like small units, which many people would say don't show any growth at all. Wiley Park, a stigmatised suburb of Sydney, is another example which has shown growth well above Sydney averages in the past 12 months, getting lots of rental demand as well. Okay, so just to finish off, just want to emphasise that the empirical formula is the mechanism we most rely on when it comes to identifying the future. Locations that tick all the boxes in terms of the economy, the market size, the population size, the infrastructure investment, the affordability factor, the low risk factor, and more is what we use to determine those places that are going to show outperform in the future. If you want to follow up with questions or comments, that's how you contact me. That's the presentation for today. We still have 10 or 15 minutes available in my time slot for people to ask their questions, which I think people have been putting in the Q&A panel, Tim.
We do. We've got a couple in there. Thank you very much for that, Terry. Really insightful. One of the things that sort of stood out to me there, and obviously this being a B2B webinar with a lot of real estate professionals here today, something that I've heard you say many times, Terry, is that a lot of people that work in the industry have a really strict formula. And they say, I only sell in capital cities, or I only do new build, or I only do this, or I only do that. And the thing that really resonated with me with what you're talking about today is just how much markets can change. And if you are so strict on a formula, you actually don't account for that big word change. And when things change, and if you don't pivot, you're left behind selling a subpar product. So I think that's a really big takeaway for our guests today.
Yeah, I think so. I think that's probably one of the very, very key points. Look, an example of that is the discussion that's been coming through media recently about, is it a good idea to invest in attached dwellings, units, townhouses, apartments? Some people have had some really strong views on it. And basically almost ridiculing the idea that anybody would want to invest in an apartment. We wholeheartedly disagree. But the evidence they cite for their viewpoint is all historical. They're saying historically houses on land have always outperformed apartments. We agree. We can't disagree with that because that's what the data shows. But what we're saying is that things are changing, and there are very clear reasons why they're changing. More and more buying cohorts are opting for that type of purchase for a range of different reasons, not just affordability, lots of reasons. And we're starting to see price outperformance by attached dwellings, outperforming houses in the same location. So if you're not aware that change is a constant in real estate, if you're stuck with a rigid view of what works always in real estate, you're going to miss some of the best opportunities.
Yeah. And look, Terry, you and I are lucky enough to sit and speak with property buyers and buyers agents every day of the week, and the common concern that everybody has is just how frenetic, how frantic some of these markets are. That when they start to go into a location they really like, they just can't buy well. And the thing is, if you don't pivot and you don't realise that things like attached dwellings, and they don't necessarily have to be an apartment, but maybe a standalone unit and things like that, that's actually where you get some better value for money, better growth, better rental yields, and less competition. So it's something that people should be waking up to, because there's some great opportunities out there in the unit space. But we've got plenty of questions to get to. So the first one, which I really liked, was a question from Danny. It says, Terry, one of the ongoing debates in property investing is around timing the market versus time in market. Given your decades of experience analysing cycles, how much emphasis do you personally place on timing the market compared to simply holding quality assets over the long term?
Yeah, well, I mean, I tend to agree. I know it's a cliche. In most cliches, there's probably an element of truth. Time in the market is really important, I think. But I can't see why you can't have both. Why can't you do both? And I think the most successful investment is where you do both. You take the viewpoint, I'm going to buy an asset and I'm going to hold it long term. In fact, I tend to have a bit of a view of never ever sell, buy good assets and keep them and accumulate. But in accumulating good assets, you can also time what you buy, where you buy, because at any point in time, you're ready to buy where you're going to buy in Australia. Well, ideally, you would buy in a location that's early in a cycle that's got the credentials for long-term capital growth. So I'd say try and do both. Have both. Time the market as best you can, based on research and good advice, but also spend time in the market once you've got that asset and hold it long term.
Yeah. No, good answer. Now, there's a couple of anonymous questions. One of them is actually about your book. It says, will you be publishing your book as Kindle on Amazon? I'm overseas and difficult to get physical book. Do you know the answer to that one?
I'm not totally sure.
Might be a question for the publishers.
Because I'm the author, I'm not the publisher.
Yeah.
I'm not aware of any intention by the publisher at this stage to publish it on Kindle.
Yeah, look, for the person who asked that question, if you'd like to send us an email, admin@hotspotting.com.au, we'll chase that up for you. Next question. Thanks, Terry. Based on the parameters that you mentioned, what has really changed in Victoria and Melbourne that people are buying there? What's the best place to buy for a budget of, say, 600,000?
Yeah, I think there are a number of factors driving the Melbourne revival. One is the level of infrastructure spending. It's something that I've talked about a lot today, but it's certainly a big factor. There really is a big infrastructure spend. A lot of people argue that Melbourne can't afford the amount of money it's spending on things like the suburban rail, given the budget situation, but nevertheless it's happening. Another factor is the level of population growth driven primarily by overseas migrants, so that's a big factor too. But also I think what's attracting buyers to Melbourne now is the affordability factor. The relative affordability. I showed you very early in the presentation how Melbourne was much more expensive than Brisbane in the past, but right now Brisbane is overtaken because Melbourne hasn't shown the level of growth. So its pricing level is very similar right now to, say, Perth and Adelaide, and behind Brisbane and a long way behind Sydney. So the affordability factor is one of the reasons why people are starting to buy in Melbourne. And you might make similar arguments for some of the locations in regional Victoria, like Bendigo, Ballarat, Geelong, Shepparton.
While we're on the subject of Melbourne, somebody has got a question in here. Annika has a question that says, with apartments, there's so much stock on market in Melbourne. I'm seeing apartments on the market for the same price they were 10 years ago, indicating a loss. What are your thoughts on this? And also, are off the plan apartments a no-go?
First question, look, this very much speaks to the central theme of the presentation. You're referring to the past, and you're right. I'm sure you can find plenty of apartments, particularly high-rise ones in places like, say, Docklands and South Bank, where there's been no growth for 10 years. We're suggesting that paradigm is changing, and so the future is going to be better than the past. But at the same time, I would avoid high-rise off-the-plan apartments. When we're talking about units, we're not necessarily talking about a 40-story high-rise with hundreds of apartments in it. We'd probably tend to avoid that kind of investment. We're far more likely to advocate sort of boutique,
lower density.
Yeah, lower density. And sometimes when we talk about units, Tim, we're talking about like townhouses, duplexes. There might be a development of three one-level standalone units, which happen to have common walls. Technically, they're units. There might be a strata plan, but they do have a land component. I would tend to personally avoid the big high-rise where there's like 300 or 400 apartments in the building, all the same essentially.
You still want scarcity. You want something that's got a unique quality, no matter what type of asset you're buying. Terry, thank you very much for setting the scene with those insights into the trends driving today's market, and more importantly, the key metrics that are important and what is just white noise. Our next guest is Joe Agresta, founder of Abode. Joe will show us how Abode's AI-driven platform and her partnership with Hotspotting is streamlining the process and creating a better client experience. So, Joe, if you could join us now, here we are. Thank you so much for joining us.
Thank you so much for having me, guys. I've been really pumped up for this event, and Terry, fantastic presentation, so insightful. So thank you for having me.
Good stuff. Well, I know you've got a presentation to share with us today, so over to you.
No problem. Well, thank you everyone for joining today and listening to me talk for a little bit. So to give you some background, I'll share my screen to start off with, and I'll share the exciting stuff that we're working on with Hotspotting. So I'll just put this up on the screen. So in essence, a little bit about Abode. So we are a home buying solution tool for both home buyers who are looking for an owner-occupier home, as well as professionals like buyers advocates, mortgage brokers, conveyancers, basically any property professional. So to give you an overview, we started in the market back in December last year, where we launched a mobile app targeted at first home kind of buyers who need that support and guidance. And we did that through property matching. So we developed an AI algorithm that essentially takes a buyer's brief about their location, their budget, and also their property preferences. And instead of individuals going to realestate.com and scrolling for hours trying to find the right properties for them without enough information, we did that for them through property matching. So we launched this in market last year, aimed at owner-occupier home buyers, helping them find the top 5 properties that would be best suited to all their criteria so they don't have to search. And then we match them with their professionals like mortgage brokers, buyers agents, conveyancers, and other property professionals they need for the journey. So I'm the CEO and co-founder of Abodey, and when we met up with Tim around last year, I showed him this technology, you know, him and Terry, and the feedback was great. And the question immediately asked was, what's the solution for property professionals? And that's what I'm so excited to talk to you about today, which is property matching that you see on the screen. So Property Match is quite different. It's essentially an algorithm, same concept for owner occupiers, but we've airlifted this for property professionals. So to give you a bit of background, I'm a buyer's advocate by trade. And right before I launched the mobile app with my co-founder Anand, who's our tech, CTO, we came across, so many issues like as a professional where I manage multiple subscriptions at once, multiple data points, and then I used Canva to prepare my property presentations. And usually that analysis stage for any client would take me maybe anywhere between 10 hours to up to 20 hours, depending on how in-depth the brief was. And this includes researching properties and markets, suburbs, and then trying to narrow down those top 3 to 5 opportunities. And then when I would present it to customers, I'd sit in these 30 to 45 minute, sessions, and they would pick maybe 1 or 2 properties and say, let's inspect them. And I thought for all that effort, it's great that we're able to help clients, with their decision fatigue, help them get to solutions quickly. But from a professional standpoint, it stopped me from being able to effectively service more clients because my time was taken up by research. So that's what this presentation is about today. So Hotspotting and Abode have teamed up. Hotspotting has a fantastic suite of data and really rich insights into the property market and especially suburb level data, which Abode, on the other hand, we are not a data provider. We've partnered with all the data providers that make our experience better for users. So we've partnered with Hotspotting, of course, Land Checker, ABS, and also PropTrack for all the property listing information. So let me get into, I guess, a live demo, which is the first time we're actually showing this to the public. So I'll show you exactly how property matching works. So I'll just minimize this at the bottom here. Okay, so all of you here would have access, hopefully, to Hotspotting itself, or you're paying for a membership. Part of this solution is we're introducing an add-on for those property professionals who want to streamline their data research and prepare white labeled reports for their clients with the use of Property Match. So when you first log in, you'll be taken through a demo mode. So if you wanted to start the demo, this would actually show you how to use it. But considering we're live, let me show you how to use it. So we'll skip this for now. And this is what we're going to see when you first land in the page. So in the interest of time, I wanted to kind of do a live demo, but I'm a bit worried that I might run over. So I might use an existing profile, but show you some of the steps. So when you get here, you can see some very clear options. We've got clients, properties, we've got some match information here, and on the right, we've got some activities and insights. Now, for our model of, for Property Match to work best, we have to add a client to the system. So what I mean by this is to organize your data. So we don't do anything with this on our side. This is simply for you to personalize the experience when you generate a report. So when you're communicating with a client, they know who it is. So let's give an example here. We'll go with, Chris at test.com. And we'll just enter a dummy number here for now. Now, once you add the client in, give it a moment. So we'll just let that load. You'll be taken to this screen here, which is the buyer brief. So this is specifically, I want to put you in the position of, imagine that you have a client who's an investor, maybe specifically they're looking for something, and they need to set up their filters. This is important because this is how our system's going to find the right properties for you. So let's give an example here. We'll get some basic demographics. Let's say it's maybe a 36 to 45-year-old. Let's say that they're a seasoned investor. In terms of their purchasing motivation, we want to know why they're actually investing, because what this data does is it informs our AI how to generate insights, because we generate personalized insights for every report. So no two reports that you do here will be the same. So let's say it's portfolio diversification, capital growth, high rental yield, and we'll have a look on this side, positive gearing. So they've got a very, they want a high performing property. Let's say the budget actually is pretty decent for what I'd look for. I'll bump up the rental yield here. Now, this is important because this is like advanced filtering is the way I would say it. So when you set your filters of you want a yield that, a minimum yield of 5 or 4.5, whatever it is, it's actually going to eliminate the properties that don't perform. So you can't currently filter like this on any other platform. So that's what we allow you to do. And be mindful, don't go up ahead here and go, yeah, I want a 13.5 to 15. You won't get it. And if you find it, please let me know and I'll buy it. So let's go to 4.5. When we go to property type, so you can select as many or as little as you like. For this example, I'll say unit and house. And we'll keep these metrics, 3 bed, 1 bath, 1 car. And I'm not fussed on land size, but you can adjust that, of course, if you'd like to. I'll say that my user is only open to small cosmetic renovations, and you can also filter it out by vacant possession. Now, we will try and eliminate properties that have vacant possession, but it depends on what data is available. So if you do find a property that does have vacant possession, fantastic, but sometimes the match, if there's not enough available information, our data will actually tell you that there's not. So that's one part. Let's go looking through suburbs. So I just want to do an example here, one that I've been asked about a lot, which is Frankston. And now the radius around Frankston, so you can set this as high or as low as you want. Obviously, the lower it is, the more focused the area is. The more you expand it, whatever suburbs fall within that 15 kilometres. So if it's Frankston, you're going to find Carrum Downs, you're probably going to find, parts of Cranbourne even potentially. So be aware of that. And in future versions, you will be able to add multiple suburbs, but for version 1, you can just do one search at a time in different suburbs. And let's say for this use case, I want to show you everything that we do here. So let me tick all these boxes. What this will do is set up the closest suburb amenities or these points of interest to the property, how far they are in driving distance and how far they are in kilometres. And then the last part here, or the last question, is deal breakers. So for example, I could say my client wants a lock-up garage. They don't want a funny shaped block, which is a common one. And they prefer no high traffic areas or property to be on a busy main road. It needs to attract tenants with young families, let's say. This is a space where you can be as specific or as open as you like, and it really doesn't have to be a negative. It can be absolute must-haves. So it's anything that your client or your investor is looking for. So once we submit that information, the first thing that we ask is, how many properties do you want us to hunt down? Do you want 2, 3, or 5? In this example, I want the top 5 because I want some more variety, and then I'll take the job of eliminating those other ones. So once we confirm, our matching platform, and this is the power of what we've built, will take up to 3 minutes or under to actually give you all of the data and insights. So you can refresh that status until it comes up, but you do get an email when your match is ready. So you don't have to sit here and wait while that's all going through. And let's say you want to update your client preferences after you get a match. You can also come back here and you can click on this button to import from other profiles, because as we know, when you're dealing with a certain brief all the time, you tend to have very similar client preferences. So you can import these from another file if you want to. While we're waiting for that to go through, let's set up your branding. So your branding is what will appear on all your reports. So when you go here, you can see that I've already, done up my branding as Abode Pro. I've uploaded a logo, put in our business details and address, and I've selected my, primary color. So I'll just change it slightly there. And then I'll save those changes. My branding's been updated. What this will allow you to do is when you generate a report that you're happy with for your clients, it'll be branded in your brand, not Hotspotting's or Abodey's. So we'll keep waiting for that to come through. And while we wait, I'll show you another account where I did this earlier. So let's go to Betty Davis. And yeah, we've got a lot of famous people that have used it. There's so many that have used it. Brad Pitt's even had a go. Okay, so now you can see on the match what happens is this is the way your matches would come through. And I did this criteria earlier for that customer. So Betty had a very similar criteria to Chris. And this is how a match analyzes. The first thing that you'll notice is we give a match score here. There's a place to give feedback, favorite, and search on realestate.com. And see this description here. This description is not the realestate.com description. This is our AI customizing it to that brief. So when you go into detailed match analysis, this is what you'll see. Just open it up. So the very first thing we'll tell you about is a brief of why this property is suited or not to the client. So this first score reasoning is the most important, as well as investment potential. So it says the property is well aligned with your requirements for 3-bed, 2-bath within budget. It offers a lock-up garage and sits in a location close to shopping, schools, public transport, dining options that are key amenities for tenant appeal. The unit requires only light cosmetic renovation as described in the listing, not major works, which suits your preference for low maintenance. The price range is below the suburbs 12-month median of $558,000 for units, but remains competitive given its size and features. Frankston has strong rental demand of 1,767 inquiries last month, low vacancy rates at 0.94%, and a solid rental yield of 4.7%, and high sales volume over the past year, 401 units sold. The PPI, so the Price Predictor Index by Hotspotting, ranks this suburb as a plateau, indicating stable market conditions but not rapid growth. So then as you go through, we will call out any compromises. So here the land area is smaller than preferred house blocks, but typical for units, may require minor updates to modernise interiors. And then when we go down here, you've got the investment potential. So it says Frankston offers high sales volumes, low vacancy rates, strong rental demand and consistent price growth over 5 years. While the PPI indicator is plateau, indicating prices are steady rather than rising rapidly, this property still presents good potential for positive gearing due to its solid yield. So it's very specific to the profile. As we move through the report, you'll notice we also do the valuation data here through PropTrack. So we provide that info just for your convenience here. When we go to Property Insights, this is where our partnership with Landchecker comes in. So we give you the premium property reports by Landchecker through our partnership. So if you open this up, you can then view all of the restrictions, the zoning, the shape of the block, any overlays on the property, nearby overlays, cultural sensitivity. Landchecker has been a fantastic tool for our users because it gives you so much context on the land. So you can see here any easements nearby, if there's planning permit history, and also nearby planning permit history, which is good for, your local infrastructure, what's being built or constructed. That might help in terms of value down the track. So this is something that we provide on every listing. Of course, if it's bushfire zone, you can see that here. If it is, it'll be coloured in purple, but this description will also tell you if it is or isn't. Sales history is also available. When you go to suburb fit, this is now strictly talking about how it appeals to potential tenants. So you can see this summary here that properties near several shopping districts such as Frankston Power Centre, Coringal Village Shopping Centre. It enhances convenience for tenants. Nature access is excellent with parks just metres away, etc. You kind of get the gist from this. So even here, like ensuring healthcare and accessibility because hospitals and health services are nearby, which is important for tenant security and wellbeing. So it's designed to be personalised. When you go through this list, as I mentioned earlier, we selected every single amenity option, which you may not do, but you can if you'd like. which will tell you, the department stores nearby. So you can see here that Big W, Harris Scarf, these are department stores, 1.6 kilometres away, 3-minute drive. The hospitals nearby, they're next to Fortitude Health, St. John of God, Frankston Rehab Hospital. All these options are available here, and you can scroll down the list. And then, of course, we've got our ABS data here from the last census, which is just giving a pulse check on, what were the rates. As data improves, so when we go through our next census next year, we will update this information with the latest info. And then in terms of investment potential, this is really the hero of the product and the big difference between our mobile app. So we don't provide this information to regular home buyers. This is specifically reserved for you guys or property professionals. So firstly here, what we do is we take all these data metrics, all of this information, and then we give you some additional data and context interpreted into layman's terms, not jargon, so you can understand and your clients can understand about the listing. So they can actually see what do these data points mean to them in really plain language so they can understand what they're going to get. So to give you an example of like rental market. So the rental market in Frankston is attractive for investors, offering a healthy yield of 4.7, low vacancy rates. The asking rent averages $470 per week, suggesting good cash flow potential from your investment unit. Frankston, for demographics and socioeconomic factors, benefits from a sizable population of over 56,000 residents and more than 139,000 in the LGA. It ranks well socioeconomically with an ERSAD decile of 8 out of 10, indicating relative affluence compared to other areas in Victoria. So let's say, we've just delivered all this information because you've input a brief, right? So typically you would have to go hunting for this information in various platforms. We've just tried to give it to you in one place. So you can keep moving through all of these different matches. Now, let's say that you're like, look, okay, that was Frankston, but you know what? I actually really don't want to look at Frankston. I want to go and change that suburb. I want to go to a different location now, and I'm going to set the radius a bit different. And I'm going to go to, specifically, I'm going to change, I want to go to Cranbourne, let's say Cranbourne East. All right, you can do this if you'd like, and you want it to be really focused. Maybe you want to review your budget for that location and make sure it's accurate. And I want to bump up the yield a little bit. Let's see what we can get. Once you submit this again, this will just start matching. It'll start finding those properties for you, and you'll see that processing matches is happening here, which is all being done without you having to input it. So now let's say that you wanted to generate a report and share this with your client. You can tap on this button here, and any of the properties that have been generated in this, any of your matches will be available to you. So let's say for this person, I think these two might be okay. Maybe I'll go down here to that 9 out of 10 from a previous match I did. And again, we give you a score to indicate how strong the match is. So if I generated a shareable link, I'll copy it over. And I'm going to go ahead and open this up in a new screen. And this is where your branding comes in. So you can see that we place your logo at the top. We've changed the colors according to my brand colors. So this is what happens when you do the same thing. And now you're viewing it as if you've sent it to your client. So your investor will be receiving this and they can interact with it themselves the same way that you do. So they can see all the investment potential. They can see all the information on the screen. They can flick between properties. They can open up the images to, go through those photos more accurately, and you can do the same. They get access to the price valuation data here. And the power of this tool is that you haven't had to do much apart from your own due diligence and just making sure that you're happy with the match itself. So all this information hasn't really changed from what you were able to see on your screen. And then if the client wants to, they can view the preferences that you selected on their behalf. And they can contact you or go to your website, all from these quick links at the top. So let's say that we go back to this page here, and we can see that if I go into properties, so there's a few little functions that you can play with here. Oh, there you go. That's actually a new match that we just generated. So that took less than a couple of minutes to come through, which is great. So that's a live demo of those things we changed. And you can see that the area has been really focused on Cranbourne East only. So it's fantastic to see how pointed it is with those filters because we've made it pretty strict. We've done vigorous testing on this. Now, let's say that you weren't happy with a match. The only thing we ask you to do is give feedback. So you can say, oh, look, it's not for me. I don't want new builds. Right? You can submit that feedback. And then what that does is our team will take that feedback on and we'll start improving our systems with it. So then every version of this, as it gets better and better and we get more feedback, we're able to do more personalization. We're able to get more data points. All this information becomes richer with your help. So the last things to kind of show you here is on the activities and insights is you can view previous reports. You can copy the link, view reports from this tab here, just quickly if you need to. So any of those reports that you've generated. You can also flick between property view. So let's say you favorited this property, maybe you favorited that one and that one. When you click into properties here, if I go into properties and I go into favorites only, you'll now be able to see the favorites that you looked at. And just to give you some extra context, if you scroll to the bottom of the page, what you'll be able to see is your matches plus more. This will show you a list of addresses that we eliminated from our search based on what you told us. So then you can always copy and paste this, jump on real estate, do some analysis. Abode does have a property reporting tool called Abode Pro, which you can generate reports based on a certain address, which will give you certain data metrics that Hotspotting also help us out with. So that's another way to do it. But that completes my presentation, Tim. I'm happy to hand over for questions or if you have anything you want to add.
Joe, thank you very much for that presentation. The easiest way to tell you whether it was good or not is to tell you that we've already had people sending us emails saying, how do I get hold of this? So
oh,
you've
fantastic.
done something well. So we knew setting out to build this that it was a problem solver. You know, I had so many conversations with BAs that are paying VAs all day long, sitting over in the Philippines, just searching after list after list after list. Now, one of the things that may not be really evident for people when they're doing this, and I know a lot of BAs are focusing on off markets and things like that, but where I find a lot of opportunities actually in real estate listings that are on market are actually the ones that might not be on page one. And they maybe have been transacted in the sense that somebody's put down an offer and it's subject to finance or it's subject to whatever it may be, another place being sold. So it's actually been under offer, but then for one reason or another, it comes back on the market later. All of a sudden it's sitting on page 6 of realestate.com. And let's face it, most people aren't finding it. The way that your algorithm works here, we're finding a match based on availability and meeting your criteria. So it's going to pick up opportunities that people may not see. And I think that's something that might have been not overlooked necessarily in that, but something that people might not understand. So it's a fantastic piece of software. At this stage, we're in pilot mode. So look, we haven't locked down pricing or anything just yet. For anybody who is interested in that, I think you might have I think Chris is going to put a link in the thing to book meetings. We'll take you through a private and tailored demonstration. And then, yeah, if you'd like to join us on a pilot program, we're basically looking to get people using it, give us feedback. Like everything in AI, it's all about retraining the model. So, Joe, we have a couple of questions. The first one was in relation to client match. How do you deal with the underquoting issues in some markets like Vic? Most properties suggested in the price range are not suitable as they sell well beyond that price, especially at auctions and things like that. So it goes on, but one of the things I'd say is that's Victoria, where you're lucky enough to get a price guide, even if it's not accurate. You know, how many locations around the country do you just not have a price at all? So how do we overcome that?
Yeah, great question. Look, at the moment, we rely on obviously PropTrack's data to provide us, you know, the listing guide. What we try and do in the background is we try and hunt down, you know, the average for the actual suburb itself. So when we're bringing up all those addresses, our AI is trying to assess what is the average for that area. Is the average a true average? And if it's not, then we're picking properties based on what we believe, based on available data from, you know, Hotspotting, ABS, trying to pick what the suburb median is. So we're trying to get it as accurate to the suburb median rather than what the indicator
Am I
is.
right? So we've also got the valuation technology that will show you what its high, medium, and average range are. Yeah.
That's right. So we will always get better at picking those properties, but the reality is that realestate.com, the way they display data and the way agent activity is in market, this is a limitation for most people, but we are building in a lot of metrics, and the model learns every minute. We've got guys working on it 24/7.
Yeah. Am I right in saying when somebody does set the budget, it doesn't necessarily go off just that anyway, though? It's going off what our valuations are. Is that right?
Correct. Yep. So those factors that we answer at the start in that filtering, it's taking into account everything all at once, but it's also making sure that that budget is pretty strict, comparing it to value of the area, comparing it to AVM prices. So it's trying to give you the best indicator and the best properties suited to that, range you gave it.
Yeah. Very good. All right, Thomas Teng, I'm going to come to you for a question now. So I'm going to open up your microphone. Feel free to ask your question. Thomas, are you there? You're still on mute. I'll give you one more second. Otherwise, we'll jump to the next question. All right, we'll go to the next one. Next question, actually, it was a question for Terry, so we might leave it there. Thomas, if you'd still like to ask your question, just add it into the Q&A for us. But Joe, thank you very much for your time today. There is a link in the chat box now for anybody who'd like to book a demo with Joe and myself to take you through the software in a bit more detail. And Joe, we look forward to seeing you again soon.
Amazing. Thank you for having me, guys, and all the best.
That's all right. Good on you, Joe. All right, so now we move on from property matching to portfolio management. Our next guest is Colin Wilson, Head of Product at Stash Property. Colin's going to demonstrate for us Stash BA, which helps professionals not only identify opportunities, but also manage entire client portfolios. It generates due diligence reports in seconds and even automate some of your vendor outreach as well. So, Colin, welcome to our webinar. I think we should have you on now. Colin, are you there?
Yes, I am. Sorry, guys.
Oh, there we go.
I'm just trying to share my video, but there we go. It's coming in now.
There we go.
And we'll share screen.
Welcome, Colin.
Thank you very much. Thank you, everyone. I take it you can see my screen there. Perfect.
Just coming up now. Colin, did you want to start? Give us a little bit of background on Stash. I understand, you guys have been around for a while now, but obviously in the Stash BA model, only in the last couple of years. So do you want to touch on a bit of history there?
Yeah, so Stash has been going for about 5 years. Pretty much the team behind it has been in the industry for probably the last couple of decades. Stash, most of the team fell out of Pricefinder over the last 20 years. So we built Pricefinder. Most of the teams worked at CoreLogic or RP Data and Australian Property Monitors. And over the last few years, we started building this Stash product for investors and developers and finding development stock or investment-worthy properties. And then the last sort of couple of years, we've sort of leaned into this buyer's agent space. So we've now just solely focused on buyer's agents and how can we help buyer's agents really understand the data, look at these different areas at a macro level down to the micro level, almost down to the property level, and really understand the nuances of every single market within the country. So we've basically got access to, there's 15,000 suburbs in the country, there's 13 million properties. This has pretty much got access to everything from local, state, federal government data sources. And it's really skewed at what does the buyer need to know? What does the buyer need to know this information for? So I'll give you a quick run through of just some of the things in terms of, as Terry went through the empirical stuff, it's really just sort of how do you start to look at that and understand seeing some of those data points, visually on a map and starting to see the different pockets and why certain pockets are doing what they're doing. So I'll use Brisbane as an example, just my hometown, but I'll give you a quick run through. So I'll go through about 10 or so different things that you could pretty much start using right away. So if I look at, say, our heat maps, pretty much the team, as I said, that built this, pretty much my team I had at Pricefinder who built the mapping have been solely responsible for this one. And we've done a lot of stuff here that I wasn't able to do back then, just with different tech. But basically what I'll do, I'll bring up pretty much every single suburb here. I'll look at houses, and we'll just look at some of these like empirical stats that we were looking at before. So, really simply being able to bring in the whole country all at once. If I could zoom out to the whole country, I could see it all shaded and look at the different colored spots where the more expensive ones are and the least expensive. So median, everyone knows. I'm not going to go into too much detail there on that one, but Some other things we've got is like the suburb growth. So seeing where certain suburbs have performed, and this is looking at over the last decade, not just the last 12 months. So you're sort of seeing, okay, what are those suburbs that have really performed year on year on year over the last decade? So if you look at certain suburbs in here, you've got, like a Brendale or something like that, where that's performed, nearly 10% year on year on year on year, literally for the last decade. Versus the last 12 months, how are those suburbs performed? And you can sort of see the little pockets, as I think Terry mentioned before. There was looking at units down a Logan. I can flick that to units, and you can sort of see some significant growth as you further go down the freeway down towards the Gold Coast. So you've got that at a visual sense. So when you are looking at those regions, those capital cities that Terry mentioned, and then sort of drilling down into these pockets and starting to understand the little micro markets within markets. Sales volume, another key one. Terry mentioned that around really identifying those areas or those suburbs that have a lot of sales volume. And it's important for two things. It's important for having a very liquid market, but also just having credible data. The more sales volume generally underpins the level of accuracy the data in those suburbs are going to have. Where if you've got 10 suburbs and 10 sales in a suburb, your median price is only going to reflect out of those 10 suburbs. Where if it's got 100 or 150, it's going to represent a more accurate median price. So having a lot more sales volume does give you that benefit as well. Looking at suburb yield, you've got that. Looking at all the different suburb rental yields across the whole country, I can zoom right out and you can sort of see the pockets where it's good and maybe not so good. Social profile, I know we mentioned it's not so important in terms of just understanding that, because if you look at those areas, down the freeway, down the Gold Coast, they are very low socioeconomic, but there's still potential, a lot of gains to be had. Where it's potentially important in those areas where, maybe little pockets of, I guess, social or lower socioeconomic profile. So it could be, this could be a lot of social housing in this area, in this little pocket. If anyone's from Brisbane knows the area, it's quite a good suburb, but there are little pockets there where there are a lot of social housing in those little pockets. So it's just being aware of that when you are looking at dots on a map or looking at two listings side by side and going, why is this one potentially more or less expensive than the other one? Those sort of things can sort of come up. Building approvals. This is sort of like a leading indicator, I suppose. If you look at sort of the areas where there's a lot of building development. To give you an example, let's just zoom out a little bit here. If anyone's familiar with like the Ipswich and Ripley and those sort of suburbs in Melbourne, you've got those suburbs out towards the west where there's a lot of development happening. And you can sort of see there's like 71% building approval. So it's basically the suburb is going to grow in terms of number of dwellings by another 70%. So there's a lot of future potential oversupply coming doit's the path. So it's just really just being aware of that when you are looking at all the different areas, just seeing, okay, why certain things are the way they are. So it's one to just really consider, because there are some suburbs that I found, and then I've looked at why is it growing, at population growth and things like that, which are all potentially good indicators, but there's a lot of dwellings coming into that market. We also look at things like the building approval, so non-residential building approval. So if we look at that, and I'll just come out a little bit. Hopefully my mapping is keeping up. This could be things for future, like job growth. So it's looking at the number of population in a given area and looking at the number of non-residential, so not housing related building approvals, could be hospitals, could be things like that, and looking at the total spend of those building approvals and looking at the population to see whether or not there are some outliers, seeing if there's some really good pockets where there's a lot of development going on and the population doesn't necessarily correlate in terms of the same things. So there's some areas down the coast you might see. I think Ormo's got some areas, Stapleton, Ormo's, I think there's some development going down there that, potentially could lead to some job growth in and around that area. Schools is another one. If I just come back up here, where this is looking at the ICC score, so another social indicator around the makeup of a given suburb. So if I look at certain areas where, as we said down before, those suburbs down, halfway down the coast, lower socioeconomic, the schools aren't as, I guess, in that socioeconomic profile. So you're going to have that. Whereas you got some other areas like in a city in Brisbane, you've got Bulimba and those sort of schools, really more affluent. And then right next to it, you got a sort of lower affluent one. When I'm looking at Brisbane, I know all these areas because I live quite local to them. But when I'm looking at, say, Melbourne, I have no real understanding of some of these areas. So it's taking what I know in Brisbane visually on just history, because I've known it, taking that down into Melbourne and then starting to see these same things around why certain pockets are the way they are. Vacancy rates will be there. owner-occupier percentages. Population's another one we went through, just making sure that those suburbs and things that you're looking at do have the population to support that. Social housing, we've got affordability, so looking at those different pockets and seeing which areas are more affordable than others. Days on market, market absorption, so days on market, let's have a look at that one. Pretty good in Brisbane at the moment, all pretty much sub 30. So that's just sort of a real quick snapshot of some of the understanding some of the data. So spatially looking at it and going, okay, here are the different areas and how does one suburb compare to the suburb next door. The other stuff we've got in terms of our mapping, and I'll bring this in because it is quite important, is looking at things like the aerial imagery, looking at the most recent aerial imagery to see how things have changed. And I'll give you a good example of that one. I'll show you this one here. This is just looking at Melbourne, so Deanside, the suburb of, and looking at all the different housing developments that have come on. If I zoom in there, you're going to see a lot of roofs there. But if I go back in time, you're going to see when those roofs started to come out of the ground. So if I went back to say even 2009, you're going to see that it was all greenfield estate, and then just being able to step it through. So probably what you'll see in those suburbs are going to be high building approvals and things like that. So if I go to pre-COVID, you're going to still see a lot of green space, and then you come into pretty much 2025 and you got a lot of roofs now. So having that is really important, and just having the, I guess, the latest imagery available. So when you are looking at a property, say you've got a couple of properties you're having a look at, just seeing what is in that property. Is there any development that's gone on next door? And you can go back in time and see how many cars are parked in the driveway to see if there's any like lower socioeconomic or a lot of rentals in the area and things like that. So being able to see when things changed that property, might have been pools gone in or solar panels put on or anything around that. Really important to see it. But it might save you trips in terms of going out and seeing some of these properties and ruling them out really quickly rather than driving out there and looking at them. That's more for the, I guess, the local stuff. You got your planning, your zoning data, bringing that in. Contours will be there, flooding, really important, particularly in Brisbane, particularly in my house. A lot of flooding, that having that imagery there or have that load of overlay. So trying to do that at a national level. So we try and source that data from councils and local state to bring that into here. And then any property that you look up, any on-market, off-market, any property, we'll be able to then flag whether these properties are affected by flood or bushfire or biodiversity or heritage. So things like that, I'll bring up bushfire. Sort of said little pockets of that are bushfire affected, biodiversity, heritage. Other negative impacts will be things like power lines. So you can sort of see, okay, here's some power lines running through the suburbs. So just being aware of that when you're looking for, just to either rule them in or rule them out. So yeah, that's sort of the mapping side. And then in terms of taking some of those learnings and taking that empirical methodology and then looking at different suburbs around the whole country. If there's 15,000 suburbs, not every one of them is going to be a good buy. So here we can actually look at every single 15,000 suburbs, look at them all at once, and then refine to find that needle in a haystack. So if I were to say, look at Queensland, and I'm looking between 600,000 and 800,000, I'll just zoom out there. There's 203 suburbs that, let me just get rid of that aerial imagery, bushfire. 203 suburbs that match between 600,000 and 800,000 in Queensland for houses. And if I go, let's look at, say, I want something with a little bit of growth. So I'm looking at, say, 5% year on year growth over the last decade. We've now got 173. I could look at growth in the last 12 months, but I'll leave that. I want to make sure my suburbs got good sales volume, so I'll just bring it up to 50 or so. Rental yield I could refine by to bring them up to whatever percentage I want. Vacancy rates, I can manipulate all these different things. I can bring in schools, social, any population growth over the last 5 years, total population, if I bring that up. So I want to make sure they've got a few thousand people in the population in that suburb. Social housing affordability, let's look at days on market and bring that into 30 or so. And then it'll give you a bunch of suburbs. So you can then interrogate those suburbs in a lot more detail and start to understand the different markets within markets. So if I have a look at certain suburbs, we mentioned Toowoomba before, so Wilstonton, median 600,000, the growth 16% in the last 12 months, 7% over the last decade, good yield, low vacancy, enough owners, social housing's fine. It is a lower socioeconomic in that part of Toowoomba, but that might be okay. It's affordable, the absorption. So basically the absorption rate looks at how much stock is actually clearing every month. So if there was 10 houses on the market, 2 to 3 of them are selling. So it's moving, but not necessarily that fast. Days on market though is within the mean, so it's in below 30. Enough sales volume. The school's relatively low and there's not a lot of building approval going on. But if I had to look at certain ones here, we've got 50 suburbs. If I just look at certain building approvals in that sole list, so it's still between 600,000 and 800,000, but it's got a huge amount of building approval. So there's a suburb that I wouldn't go near personally, based off the number of potential oversupply that could affect that area moving forward. Same with Flinders View, Barony Heights still at 15%, Yarra if you're familiar with that area. It's a lot of development coming over the last sort of five years or so. So they're things that you can then go and refine that further and go, let's get rid of make sure that the areas that I want to explore further do have that low building approval. And I can just bring that up again and those ones are gone. And then I can produce this, I can produce reports on this fully branded, and you can present that to different people, or if you were to use it as part of content generation. So if you've got buyers out there or vendors out there that you want to work with and going, okay, I want to create content that you could then deliver to people. This is one that you could do. I get asked a lot around top 100 suburbs, or for instance, top 100 suburbs in Queensland, or top 100 suburbs in Victoria, or good rental opportunities in Vic. So you could basically create those reports, create a whole bunch of them, produce your own branded collateral that you could use for either lead gen or just for attraction purposes to try and bring people towards your orbit, whether that's for buyers or sellers, being able to surface that. So that's sort of one, really good report there that you could use. You can call it your own top 100 suburb report, top 50 suburb report, top 10, and choose all the different data points that you want or are relevant to that person or that team or that sort of cohort of user, and share that with your audience. You can also export it to Excel and do your own intelligence and interrogation and start exploring these areas. So if you are data minded and you're looking at those capital cities that, say, Terry mentions, and you want to sort of get into the detail and get into the weeds around what suburbs are sort of more performing than others, or leading indicators around that, you should be able to do that. If you want to then drill further into a suburb, you can click on them and it'll give you all the stats around that suburb. So if I use, what did I use? Wilstonson as an example. I'll just let that load in. So this one here, I'll show you where it is. So that must be Wellcamp there. I'm not totally familiar with Toowoomba, but we'll go with that. So this is Toowoomba. I know Wellcamp's out there. This is just giving you a quick summary of everything we know about that suburb. So if you're familiar with Pricefinder, it's a suburb flyover equivalent, CoreLogic's got suburb profiles. But here is everything we know about this suburb. 600,000 is the median. The low band and high band, this is where the majority of sales fall. So we look at that. It's basically the 50% of all sales fall between 550 and 661 in this suburb. And it's based off a good number, it's 100 sales. So it's a good number to have credible data. We look at how that suburb's performed over the last 1 year, 3 years, and 5 years. So it's pretty much doubled in the last 5 years, but a lot of sort of this area has. And that long-term growth over the last decade, 6.7%. The rental stats are there, so vacancy rates relatively low, good number of rentals. The potential yield in this suburb is 4.39, so we've got all that. Then you got a whole bunch of other stats here around building approvals and level of discounting. So is there any discounting going on in these suburbs? If you want to drill down further to look at house versus units, you can do that. Or also, if you're looking at, say, what is a 3-bedroom worth versus a 4-bedroom worth, you'll be able to interrogate that data there as well. And as well as we sort of link out to all the other providers around medians. I know when I get questions all the time, this median, I see a median over here, it says this, and I see a median over here and it says that. They're both right, effectively. It's just that they're all based on generally different data or the data that they've got available to them. So we link out to all the other providers going, okay, what do they think? What do they think? What do they think? And then you can just go in and compare. So that's medians. You've got all your chart history going back a decade, so you can sort of see those, how's this suburb performed. We look at those rental price, and as we were talking about before, with is the rental price going up significantly, and maybe the house prices aren't yet catching up. You can sort of see that through here. So in this area, the rental yield is starting to come down, probably as those prices do tick up. The vacancy rates there, how's that performed over year on year over the last sort of 5 years? Days on market, how's that performed? This one's really come off started to pick up, I guess, since COVID. The sales volume, is there enough volume to support that activity? So, yep, good sales volume here. Percentage of stock that's on the market. So more towards demand and supply. So looking at that and going, okay, those numbers are coming down, so demand is increasing. And that market absorption looks at those number of sales that have transacted every month, how much of that stock is actually clearing out. So in this area, we're seeing 40%, which is really good. And then you can produce that into its own report as well. So you've got basically a suburb summary of that you could produce fully branded that you can give to anyone at the stage of their journey. If you've just got a buyer interested in a certain area, you can share that with them in a fully branded way. You've got everything that we just went through, but it's also got your comparable sales and everything like that in here as well. Lots of demographics, all of those flood maps and risk maps are where the pockets in that suburb may be affected. Any development applications that may affect, and a lot of market activity. So that's sort of at a suburb level. You can then sort of drill down. So as I said, you've got access to every single property here. So all 13 million properties, whether it's on market or off market or just anything. So some of the things around searching for on market, we're starting to bring in a lot more, I guess, search options here around trying to find. So in particular on market, there's probably 150,000 properties on the market in any given moment at the moment. Back when I was at Domain years ago, I remember those numbers being a lot higher. So some of the things here. So if I search in Brisbane and we'll look at houses, I can put in a price range, but I won't bother with that. I can search via just show me properties that are priced below the median. So if I'm trying to buy a property that is at the lower end of the scale in that suburb. So let's just see if I've got anything here that's relevant. Just as an example, we'll use this one. I don't know, well, I know Clayfield, but I don't know this property. But offers over $899. It's a 400 block. It's a 3-bed. It offers over $899. The median for 3-bedroom houses in that suburb is 1.3. So it's how do you refine out of all those 150,000 properties on the market? How can I try and find those properties that are the cheapest in those suburbs? So potentially, like, I could get in, maybe get out, or from a renovation perspective, or I potentially could get that yield uplift, with a slight lipstick reno. So that's if buyers are targeting those ones. You could also do the same search via yield, just to show you some of the other stuff I've got here. So you could search on, just show me properties that on market yielding 5%, 4% anywhere in the country. You'd be able to do that, and where it's priced below the suburb median. Or I could look at any listing on the market that's been owned by the same person for, say, more than 30 years. So if I look at something like that, here's properties on the market. This person's owned it for 32 years. It's been on the market 5 days. It's owner occupied. So it's just a way to try and, when you're looking and starting to identify these areas, I was looking at this sort of example. I was trying to find more of a renovator, and the assumption or the hypothesis was, if the property had been owned for 30, 40 years, chances are that may be an opportunity where I could get in and potentially do a renovation on it and get out. So it was just another way to search. But basically, yeah, here's property, 32 years, owner occ. It's in a suburb median of 850, suburb yield is 3.9, and then you can go and interrogate that one. I'll show you this Clayfield one as just an example, because I do know it floods around there. So we'll see if this goes impacted in any way. So basically, we'll bring up a property. And just to show you some of the data. So you've seen Price Finder before, you've seen CoreLogic and everything, but just to show you where we've sort of taken it. I mean, there's a lot of data out there. So what we've sort of do is tried to collate a lot of that data and bring it all into one spot. So this property here, it's a dual access, it's a 1960 build, it's tenant occupied. I've got the area, I've got the building area, I've got the frontage. Daniel, can't speak now. It's currently on the market. We can look at the social housing, how far away the train stations, the bus stops, and we can search on, on market by all of these different parameters. We can go, okay, I'm trying to find an on-market property that's within 50 meters from a train station. You'd be able to do that anywhere in the country in one search. We plug in a lot of data. So if we don't have it, pretty much the only thing we don't have in terms of data from my old Price Finder days is pretty much that owner's name. So we partner with Price Finder, National Property Data. I'm working on CoreLogic as well, or Catality, around bringing those things in. So you can pretty much bolt all your different subscriptions into here if you needed it. But in terms of the data that we don't have, it's pretty much just the owner's name, but everything else we do, comparable sales, your CMAs, and everything can be done in here. You've got your timeline. So how much, when is this property? What's its history? Its land val, rentals, when did it last sell? So this property is last sold in 2012. Planning insights. Okay, yep, Clayfield, we didn't expect that one to be flooded. So yes, there is some flooding. If I had to bring in that map, just to quickly show you. So you can sort of see where it is impacted by, oh yeah, this is really wet. You can see that there. You've also got your development projects. So this partners up with a BCI, which is a partner that we've got, and we look at how is there anything that could impact this property, but from an oversupply perspective or a jobs perspective. So this one, there's 45 projects with 400 new dwellings within 2Ks, and we can go and drill down and see what that actually is. So in here, we have a look at the development projects. We see the different numbers. So there's some residential dwellings, 394 of them. Most of them in construction phase, some of them design and documentation phase, and a lot of them are expected to sort of come online in 2028. So potential supply from that perspective. But then we can drill down into those actual developments and see what they actually are. So we can see there's retail, there's sport, recreation. Let's see if there are any big numbers in there. There should be some. 5 million for a mental health facility, childcare, telecommunications. So it's just being able to bring in all that data into one spot and then start to see whether this is a positive or a negative for that particular property, whether it's an oversupply or say job growth. And you can see all those different developments on and the status that they're in. So these ones are in design, these ones are in construction, and being able to see that and how it might impact the property that you're looking at. You've got all your, let me jump back into here. Any sort of other market insights about this property for buyers agents, they're storing a lot of data in here. So they're basically keeping track of all the different properties. And I'll quickly show you at the end how that sort of relevates. But here's, I'm going to stash this to my pipeline. I'm going to save it for sort of Colin and Amy, and it's in the shortlist phase. So we're going to keep track of this property. We're going to add any walkthroughs and things like that. We can fire off before you dig documents and bring all them in. We can get building and pest in here as well. We look at our comparable sales and see how any, is my pricing point for this property correct? If I was just essentially I'm looking, say, for a knockdown rebuild personally. So I can actually look at some comparable sales to see if there's any knockdown rebuild examples that have happened in that area. And just to quickly show you, I'll see if there is any, or even just renos, just quick flips and renos. So there's some properties here that have been bought and sold previously. I don't know if there's any good examples here. That just look like general flips. So 1.24. 1249 sold in 2024 sold for 1.5. This one here was not a lot of difference. This one here is 100,000, not much. This one here is probably more of a $900,000 uplift. So just being able to see those properties, if that's what your buyer's trying to do, you can actually bring them in. And then you can actually print off your basic CMA. So you've got a full in CMA in here, which is aimed at the buyer. So it's all about what does the buyer need to know. It's not just about the comparable sales, although that will be there. It's going to bring in all those risk layers. We've got some AI tools where you can write up the summaries and things like that. You can bring in those estimates, or you can get rid of those estimates if it's not in line with what you're actually purchasing, and basically bring it into a big consents document that is going to tell you everything that you'll need to know about that property before purchasing it. So that's sort of really quickly just some of the stash things that we work on again for the buyer. The thing that we are sort of pushing towards now is how do we help you as a buyer's agent, and I'm running out of time, it's basically bring it into that brief. So here's where you can actually put all your details around what the buyer's actually after, seeing how their current portfolio is tracking. So any properties that they've currently got, we'll be able to keep tabs on those properties and let them know when things change. So if you've got investors out there that are buying properties, are going, okay, some of these investments that I bought, when potentially could they go again? It's not necessarily, I'm going to call them in 12 months time. I'm going to call them pretty much as the market's determining when I think they can go again and what's their available equity look like. Similar things around the brief of going, we're showing you suburbs that, what is this person after in terms of what is their brief? What are the suburbs that match that? What are some other suggested suburbs that could match this brief? This is just my brief because I am looking at Frankston at the moment. Funnily enough, I know Joe mentioned that, and it seems to be I'm on the right track with where I'm looking, so that's good. You can bring in off-market properties. So if there is any off-market properties, this is probably too far away, but yeah, so any off-market, there's not a huge amount, but we've got a lot of buyers agents who maybe don't have yet clients yet, or haven't, or have leads with agents, they're finding stock, but don't have a buyer necessarily for one of these properties. So they can put it on here and see if any other buyers agents will pick them up. So that's where the off-market, that's where a lot of the off-markets are coming from. On markets, it'll bring them in. So if any on markets are available there. I should mention the off markets, we've also brought in withdrawals. So it's another good way to find property. So if any property that was advertised for sale didn't sell, in the past couple of years, they may be ones you could go and target direct or connect with the agent associated with that and see if those properties may come to market as the market's changed. So we'll bring in all those, any withdrawn properties that are matched to that brief that person's looking at, as well as the on market. And then you can save all those to a short list and keep track of all the different properties. There's a bunch of AI tools there around, why does this match? Why doesn't it match? And then you can print that out into a brief, fully branded, that you can present to your buyer. So there's a lot of things going on in the stash world. But yeah, I think it's all about, there's so much data out there. How do we help you understand it more and just make it simple to, I guess, deliver it to your client is kind of the key thing that we've been focused on. Tim.
Colin, thank you very much for that. Every time I see this platform, I learn something new. There's just so many tools in there. And yeah, I actually needed to see this demo again myself because there's some tools in there I didn't know that existed, and they're all incredibly helpful. So I'm sure our audience would have got some fantastic tips from that. I believe we're going to have a link sent into the chat there as well for anybody who's interested in learning more about Stash. You can reach out there and connect with. I think there might even be a special offer on there for
yeah, definitely
on the webinar.
Yeah, the best thing is just have a trial, like play with it and see if it actually can save you time. But it's basically trying to bring that back. We're integrating with pretty much any of the other prop techs that are integrating. So we're trying to make it easy across the board because we know people have multiple subscriptions to certain things, and that necessarily probably won't change across too many things. But how do we help you do your job when you do have those different data providers? So yeah, that's kind of a big part for us as well.
Yeah, that's it. Well, it's fantastic technology, and appreciate your demo, Colin. We've got a couple of quick questions there. One of them is just a simple one. What's your suburb profile? How does it differ from something like RP data? Do you have
It probably does. The suburb profile is not necessarily a huge part. It's there because it's expected to be there, I suppose.
Yeah.
It's more about how do we help you find that suburb in the first place, and it's looking through those the heat maps or the search tools to go, okay, I want to find the 5 suburbs that match my brief out of the 15,000.
Yeah.
And then
Look,
the data on that is the data.
I'd even argue that suburb profiles in what they used to be are probably a little bit defunct now. I mean, you can get that data very easily to say what's the median, what's all that. It's actually this level, that the interactive level, that is important. That due diligence level that is really important. I don't think you'll get a lot of that out of RP Data's one, if I recall correctly. Yeah. The next one, which you may have already answered in the question, it popped up before you went to this, but Jay has a question. Do we have anywhere where we know about infrastructure projects in the suburb? So I noticed that you did do a demonstration once you're at the property level.
Yeah.
Is there another way on a map feature to sort of look at?
It's only done at the property or the suburb at the moment.
Mm-hmm.
So you can type in the suburb and then explore it from there around how it affects that. The bit that I've crunched it in the background, I haven't actually surfaced it up, but one we were looking at is going, okay, I'm going to look at all the projects that are in the country right now, top down, show me the most expensive ones, and just really then going to go target around that and see why these could be ones primed for growth. So yeah, there is, and also then overlaying that against something else like that on its own is fine.
Yeah,
like things like we did with the building approvals ratio and the building approvals per capita thing. It's like it's applying that data set versus something else to make sense of it. And to see where those outliers are, I think is key. So yeah, we've got all the building approvals, but the development projects is one we've just got to explore at that global level, the macro level.
Yeah, amazing. Colin, I've got probably time for one more. We've done really well to keep the schedule today, 1 o'clock till 3, and we're 1 minute over, but there's one more from Raj. It's a question for both Abode and Stash. How often is the data refreshed for property searches? I've searched for properties on Stash, click the link on one that shows it's available, and it takes you into REA, and it may already be under offer. Look, that's actually a challenge across the board because a lot of the markets that you're looking at are very quick to move, but also where the PropTrack doesn't necessarily allow you at your end, if I'm correct, to actually say that it's actually under offer. Is that right? Some of the things that they share via API don't actually connect with that.
Well, for us, we don't have a direct. We collate data. With Joe, obviously with PropTrack, you're going to have that API, so you don't necessarily have the data locally, but you do have the data direct from one of the sources, which is obviously the biggest source. So we sort of work with our partners with. So over the past 20 years, we've worked with Real Estate Institute, other portals to bring all that data together. And we're sort of seeing, 100% of listings isn't necessarily on one site. Certainly domain is sort of at the 90% or so. So yeah, there's data out there everywhere, and I think we're seeing the rise of not necessarily off market, but pre-market. So there's a lot of listings in this pre-market orbit that is interesting. Put it that way. It's grown up a lot in the last sort of year or so.
Yeah, absolutely. All right. Well, thank you very much, Colin. That wraps up our presentation for today, folks. Thank you, everyone, for joining us. As you can see, today's presentation was very much tailored towards helping you as a real estate professional. We're trying to identify what problems you're having and hoping to provide solutions like this for you to make your job easier. We'd love to get some feedback on this presentation. If anyone's got any questions, shoot us through an email or feedback at admin@hotspotting.com.au, and we look forward to seeing you all again next time. Thank you, Terry. Thank you, Joe. Thank you, Colin.
Thanks for your time.
Thank you all. Bye.
Cheers.